There is a 95% chance the rates are about to cut, and I'm going to share with you exactly what my thoughts are, especially if you own a property or are looking at buying one. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, before I continue, you're going to see the title and you'll say, interest rate cuts? I'm not sure. Then you go, okay, if it's going to happen and I've been looking at wanting to purchase a property, how do I execute with speed? You're going to contact Search Property. We've not only helped over 1,000 clients, but we've also purchased thousands of properties in Australia. So we know a thing or two when it comes to purchasing the right properties in the right market cycles and using data to execute at speed. So if you're interested in moving with speed, definitely go ahead and use the link in the description box below to book your free call. Now, the latest inflation data has come out and that has started to cause the RBA to turn their head. In fact, if we come to the RBA rate tracker, we're starting to see this number change quite a bit. And what we can see at the bottom here is the 17th of Jan, we're at about 73% chance the rates would actually cut at the next meeting. And if you continue down, it was pretty much at 78% until the 23rd of Jan. Then from the 24th, it was at 84%. And as soon as the inflation data came out, it's gone up to 95%. Now, does that actually mean it's going to cut? Well, no, because this isn't the RBA saying it is definitely going to cut or not cut. But what we can see is the sentiment has definitely shifted. Especially with this inflation data that's come out, although it is a very short-term win, it definitely confirms that this inflation problem that we think we have in Australia is now subsiding. And what we need to focus on is what the RBA does next, because that is going to have a massive effect on someone who wants to purchase property or already has some debt attached to their property. Now, the odds of an interest rate cut next month have increased, with the official figures showing the Reserve Bank preferred measure of inflation fell to 3.2% over the year to December. Consumer prices rose less than expected in the final quarter of 2024, while measures of underlying inflation also eased, according to the ABS figures. The trimmed mean, a measure of underlying inflation, slowed to 0.5% in the quarter, below Economist's forecast of 0.6% rise. Now, that doesn't sound like a lot, like you expected 0.6 and it was 0.5, but that is massive, especially when it comes to this sort of context. In the wake of the release, financial markets were pricing in a more than 90% chance of an interest rate cut in February, while the Australian dollar lost ground. The annual trimmed mean of 3.2% was also below forecasts of 3.3% and a slowdown from the previous quarter. The more volatile headline inflation figure came in at 0.2% for the December quarter and 2.4% for the year, down from a peak of 7.8% 2 years ago. The December quarter's rise was the same as the 0.2% increase in the September 2024 quarter, and these rises were the lowest recorded since June 2020 quarter, when the CPI fell during the COVID-19 outbreak when childcare was free. Let's take that into consideration. We're in 2025. This is the lowest recorded increase since 2020, when we had the COVID pandemic and childcare was free. That is absolutely wild. And I think, to be honest, this is quite concerning. Because what happens is the ship, the mothership, if you like to call it, takes time to turn. You don't suddenly go, inflation's dropping, and what we're going to do is we're going to cut interest rates and inflation will start popping back up straight away, and everything's going to be back to normal fairly quickly. No, it takes time. I would go on to say that if they don't cut at the next meeting, it's most likely going to happen at the one after that. But if they take too long before they start cutting rates, you're going to see inflation continue to go lower. And as that number keeps going lower, the likelihood of an interest rate cut increases, but the effect of that interest rate movement is less and less effective in this situation. So what I mean by that is, going back into 2020, what you would have seen is inflation drop, and then we see, okay, interest rate cuts, interest rate cuts, interest rate cuts to try and stimulate the economy again, but it still took some time. And that's exactly what could play out here. Because following that, they started increasing interest rates very quickly. But even then, the economy was very slow to react. Just think about the initial move being really not effective at all, because it takes a few months before it actually comes into effect. But if you're someone who has debt, then it comes into effect pretty much in the next month. Because if the RBA do cut, the banks most likely will pass that on. We've already seen numerous lenders now starting to cut rates, and they've cut rates not just on home loans, but they've also cut rates on their term deposits. So what that could mean is that as soon as you go and see the RBA cut rates, it's not going to be too much time before the banks do pass that on. And that would then reflect on how much you pay as your mortgage repayment in the next couple of weeks. Cut, baby, cut. Economists have joined financial markets in viewing an interest rate cut as a likely prospect. BetterShares chief economist David titled his note "Cut, baby, cut" and described the inflation result as a material surprise to the downside. There's now a good chance trimmed mean underlying inflation could fall back to within the RBA's 2.3% inflation target band by June, rather than the RBA's current expectation of December, he wrote. As a result, and despite still solid employment growth, there's no question the economy deserves an interest rate cut to ease the restrictiveness of current policy settings. I anticipate the Reserve Bank will welcome these inflation results and reward hard-pressed households and mortgage holders with an interest rate cut. Now, a couple of years ago, we were talking about a soft landing and a hard landing, and I'm going to explain it to you because you might be new here. Essentially, what they've been trying to do, the governments around the world and the central banks working together to basically get a soft landing. And what that means is that when you have turbulence in the economy, turbulence, very appropriate because we're talking about flights as well, is that you're thinking about how do I get the plane to go through the turbulence and then softly land. But if you pull the trigger too quickly or you pull the trigger too late and you can't land properly, it's a hard landing. And the hard landing is quite often referred to as a recession or an economic downturn. That's what they've been trying to avoid. So it is a very difficult task because what you did is in 2020, which feels like yesterday, but it was 5 years ago, you saw the entire economy, the world economy shut down. You had a period there where nothing really happened. You then saw inflation go down, we saw economic growth fall through the floor, and then the interest rate cuts started happening like a coordinated move across the world. What we saw is the economy stimulate and then increase in economic growth and whatnot. But because you have such a rubber band effect, when you pull too hard, the effect of it is absolutely massive. It's like putting toothpaste out and then expecting the toothpaste to come back into the tube. It's not going to happen. And that's exactly what happened. There was so much money that got sloshed into the system, it meant that it was very hard to control. So what you've seen is a lot of turbulence going through, and now what they've tried to do is say, okay, we need to push, pull, push, pull, push, pull, so that we can softly land this economy. And responding to the December quarter's figures, Treasurer Jim Chalmers described it as a sustained progress in the fight against inflation. We don't pretend it is a mission accomplished on inflation, but we are making very substantial progress, Mr. Chalmers said, noting that many Australians were still doing it tough. The Reserve Bank will weigh up all of those considerations. They'll come to a decision independently, but I think what's seeing here is a reminder that the soft landing that we have been planning for and preparing for is looking more and more likely. I think it's interesting, he says, decision independently, and it also happens to be just before the actual election. I'm not going to get into politics because I frankly don't know much about it and don't really care. But I want to know what your thoughts are. Are we finally going to get that cut that we've been waiting for over 18 months? Or do you think we're still going to kick the can down the road and inflation is still a problem? Or do we need to see these interest rates hold for a much longer time? I want to know what your thoughts are. Comment down below. Let's start that conversation, and I'll catch you guys in the next video. Thanks, guys.